Listen to this. Millions of Americans are filing their taxes right now, hoping to get thousands of dollars back as fast as possible. But honestly, who could blame them? The IRS just sent a very clear message that everyone needs to understand. Refunds may take longer this year. Not because you did anything wrong, not because you filed late, but because this tax season is unlike any other we've seen before. So I'm going to break down exactly what is going on and what you could expect. So yes, the IRS officially is going ahead and accepting federal tax returns on January 26th. So if you're ready to file and you normally file early, you absolutely can do that. But here's what matters. Accepting returns does not mean issuing refunds quickly. So they're saying that for this tax season, you may not necessarily get an instant refund or get the refund as quickly as you're used to getting them. So this year, speed is the exception, not the rule, and why that refund timing matters and why it's so different this year. So here's the part most people haven't been told as it relates to this, and this is where the exception matters. This tax season isn't slower because people are filing wrong. It's slower because the system itself is actually under a lot of pressure. So three major forces are hitting the IRS at the same time. There's going to be fewer workers than ever before, so there's staffing issues. The IRS lost more than a quarter of its workforce. At one point, they had 100,000 employees. Now they're operating closer to 75,000 or even less in some departments. So that means fewer people are reviewing returns, fewer people are answering the phones now, and fewer people are resolving issues when something gets flagged. And here's the important part. Those staff cuts didn't happen during a slow year. All right, they happened right before one of the largest tax filing seasons we've ever seen. So number two, record-breaking number of returns. So at the same time, the IRS expects about 164 million individual tax returns to be filed. So that's just individuals. That does not even include small businesses. It doesn't even include the corporations. It doesn't include the partnerships and the trust and all these different tax returns that are available. So that is a overwhelming amount, especially given this staffing cut. So if you have more returns than ever being handled by fewer people than before, even if the system works out perfectly, the math alone tells us that refunds won't all move at lightning speed like they typically do. So major tax law changes all happen at once as well. So this is going to be like a layered issue. But now this tax season, there's new credits that are out there. There's new deductions that you need to be aware of. There's new eligibility rules. And this is all going to impact some of the things that we could see for the tax season of this year. Even the way calculations are done, there's also new IRS system updates. So whenever tax law changes happen, the IRS has to update their software. They have to go in and do more testing. They have to retrain their staff on what the new changes are, what the new rules are, what to be looking out for. They have to adjust their fraud filters to be able to figure out which tax returns they need to review and which ones they need to do audits on. They need to review more returns manually. And that combination almost always leads to processing slowdowns. So not for everyone, but for many people. And the more complex your return is, the more likely it's going to take extra time. So yes, the great news is refunds are going to be bigger this year, but that also means things are going to get even more slowed down. So the average federal refund is expected to be over $4,000 this year, and that number is real. But here's what most people miss. Bigger refunds usually means more reviews, not faster payments. So refunds are larger this year because several major tax changes, including the child tax credit increasing to $2,200. There's no federal tax on tips. There's no federal tax on overtime. And there's also this expanded vehicle interest deduction for certain loans. And the SALT, state and local tax deduction, is jumping up from $10,000 to now to $40,000. There's also a new $6,000 or $12,000 senior deduction that just got implemented, and also all of that helps taxpayers, which is a great thing. But here's the key point you need to understand. More benefits always means more review time. So returns that include these new credits, the returns that include some large deductions, the returns that may get a bigger tax refund this year is going to be more than likely going to be flagged for additional review given the changes in the tax code. So if this happens, right now, these returns are going to be looked at manually. It's going to slow down things in the processing cycle. And that doesn't mean there's necessarily a problem with it. It doesn't mean you did anything wrong. It just simply means patience matters more than ever this year than usual. So let's clear up some of the Social Security confusion that's out there. So this part is very important because there's a lot of confusion out there. You may have heard people say Social Security is no longer a tax, and that is not accurate. Here's what actually changed as it relates to this. There is now a $6,000 or a $12,000 deduction as it relates to seniors. So designed to reduce how much of your Social Security is going to be taxable now. So because of that, about 88% of beneficiaries will owe little to no federal tax on their benefits. So roughly about 12% will still owe on federal taxes as it relates to this, but don't forget this part. Several states still tax Social Security benefits. So at the state level, you can still get taxed, but at the federal level, you may be able to not have to pay little to no tax on this. All right. So depending on where you live, your return may still have those federal calculations. And of course, depending on your state, the state level Social Security tax calculations are going to be included as well. So that added complexity is another reason why refunds can take longer this year. So the 21-day rule still is going to apply. So here's something you should always remember. When and once you file a tax return, the IRS asks for 21 days before expecting answers. So that's normal. That's not new. What is different this year is what happens during those 21 days. So you may notice longer calls, longer wait times, slower online updates as well, and refunds sitting and processing longer than usual. So checking where is my refund is going to be fine. Just don't panic if nothing changes right away, because again, with all the changes that are happening, we should expect some delays. So the messaging is probably going to look generic. If you don't see any updates for a while, that's happening to a lot of people this year. And one rule that's going to be non-negotiable as it relates to this, so this surprises people every single tax season, paper refund checks are gone. All right. So federal tax refunds are direct deposit only. So if you file, make sure you have your bank information correct. Double checking routing numbers is going to be even more important this year, especially if this is your first year going ahead and doing a direct deposit. Double checking your account numbers, because literally one wrong digit could turn a normal delay into a long delay. So no direct deposit or incorrect information means major slowdown. So here's the takeaway. File when you're ready. Make sure your information is accurate. You want to make sure you're using direct deposit. Expect refunds to take longer this year. The money is real. The refunds are coming. Just don't let timing catch you off guard. And if this helped, make sure you go ahead and share this video, subscribe, and I'll see you in the next one. Take care.